We weren't 100% certain if this should be a webinar blitz or a tariff blitz, given how quickly the various tariff announcements are coming out. To underscore that, since we were putting this presentation together, there was an announcement of a new truck investigation, Section 232 investigation, which will likely lead to more tariffs in that section. And then we had a potentially major pullback in the tariffs on the automotive section, and that was just in the last week. So I guess we're going to go with it's a tariff blitz because of the way things are going. One of the most common questions we get about the tariffs are actually, can you please explain the tariffs to us? Can you please tell us where the tariffs are likely to end up? And can you please tell us what the coping mechanisms are for the tariffs? So what we thought we would do in the first part of this presentation is to focus on those questions, including some of the frequently asked questions, and then a couple of the frequently need to be forgotten questions that we're getting from clients, because we are seeing some situations where people are asking like, well, would it be permissible to do this? Maybe like to unbundle things and pay for part of things separately to kind of cope with it. There's a lot of confusion about like what can be done and what can't be done in order to cope with the tariffs, including some pretty dubious advice that we're finding online. So in the first presentation, what we're going to be doing today, we're going to be talking about where the tariffs are, where they're going, and then some of the key frequently asked questions we're having. Then in part two of the presentation, which will be about an hour from now, we have two experts coming online who are going to be talking about two of the most important coping mechanisms, which is the contractual piece as well as the lobbying piece, because obviously there's a lot of play in how these tariffs are being rolled out. And then in the last part, we're going to circle back to the issue of understanding what kind of coping mechanisms you have and understanding why customs compliance in the new high tariff, high penalty environment is so super important, because the risks of importing have never been higher. So by the end of this, we hope that people leave with a good understanding of the tariff structure, where the tariffs are going, and the various ways that people can risk manage the tariff environment and take steps to minimize the risk as importing. So circling back to the very first question, which is where are we on the Trump tariffs? There's been well more than a dozen tariff announcements that have come out. So we kind of think of them in 5 buckets as they were, which is the best way to organize them. So the first bucket is the least controversial, which is people forget, but the normal Chapter 1 through 97 duties, which are the tariff duties that were in place 5, 10, 20, 50 years ago, those are still in place. And they still give the basic structure for determining what tariffs are due. And they're the starting point. They're usually not that big. They're usually between 0 and somewhere around 7%. And the tariff is based on knowing the country of origin, the classification of the good, and the valuation of the good. If you know those 3 things, you generally can tell what the general tariff is, and that is going to give you the structure for all the other tariffs as well. The second bucket is the global 10% tariffs. These are not paused right now. The Trump administration has indicated that they're not subject to negotiation. We think of these as being for revenue purposes, and then President Trump basically thinking of them as they're the price of entry to sell into the US market. So we don't see those as going away. And as a reminder, when special tariffs were put in place by President Trump in his first administration for steel and aluminum, for example, and for the Section 301 duties on China, they stayed through a Democratic administration and were not taken down. In fact, they were expanded a little bit. So there's a high likelihood, we believe, that these global 10% tariffs are going to stay in place, and people are paying them right now. The next bucket is the reciprocal tariffs. And these were the tariffs that were announced that were such a big deal a few weeks ago and that are currently paused. These tariffs were up to 50%, putting aside China. Somewhat confusingly, the reciprocal tariff amount included the global 10% tariff. It would have been a little bit easier to understand if, for example, instead of saying there's a 40% reciprocal tariff on Vietnam, instead it had said, well, actually there's a 10% global tariff plus 36%. So the reciprocal tariff amount that was announced included the global tariffs. And it's currently paused for every country except for China. It's even paused for the one island that only has penguins living on it, which for some reason got its own reciprocal tariff. The fourth bucket is you have to put China in its own category because it's so high and because it has so many different tariffs on it. As a starting point, the Section 301 tariffs that seem like a big deal in the first Trump administration, but now have been vastly trumped, so to speak. Those tariffs of up to 25%, which covered about half of trade with China, they've been in place for 7 years. They're not going anywhere. They stayed in place through the Biden administration. They're still there. Then at the very beginning of the Trump administration, he announced a 10% plus another 10% tariff based on the alleged participation of China in fentanyl trafficking. That is not suspended and it's still there. So even before the reciprocal tariffs, you were seeing tariffs on China of the normal Chapter 1 through 97 duties, plus the Section 301 duties where they applied, plus universal 20% tariffs for under IEEPA. And then the last one was the announcement of the global and reciprocal tariffs. This number has gone up several times and ended up at 125% because basically President Trump announced the tariff. China retaliated, so the United States retaliated against them, took it up eventually to 125%. There was an announcement that the press took as like, oh, there's a big easing on it, which is that the tariff is suspended for many electronic products. But really, that was just an announcement that for certain electronic products that contain a lot of semiconductor, that they're moving into bucket 5. So that is being misinterpreted as Trump moving back, whereas it actually is consistent with the buckets that we're putting together, because bucket number 5 is the sectoral Section 232 tariffs, which are the ones that are put in place on sectors that have critical importance. So steel and aluminum is a bump up and an increase from the use of Section 232 tariffs in the first Trump administration. We have automotive tariffs, which currently are suspended for USMCA compliant goods. And the Department of Commerce is putting together a system to allow importers to exempt the U.S. origin content, so they pay the tariff only on the non-U.S. origin content. It's a bit tricky and complicated, which is why there is a temporary suspension into the beginning of May for that. But notably, the reciprocal tariffs also carve out any ongoing sectoral tariffs that are either in place or have begun, or that might be begun in the future. So copper, lumber, pharmaceutical products, semiconductor goods, and now trucks are all either the subject of these Section 232 sectoral tariffs or are expected to have it soon. So really what Trump was clarifying with the electronic products is they're going to be covered by the sectoral tariffs. Now, the odd thing about the sectoral tariffs is because right now the reciprocal tariffs are so high, particularly for China, that people actually want to be covered in many cases by the Section 232 tariffs, because 25% is better than, say 170% like you'd have for China. So in terms of where we see these buckets going, obviously the Chapter 1 through 97 normal duties are permanent. View the 10% tariffs as likely to be permanent. I mean, they're collecting literally $1 billion a day or so, even with the sharp fall off on imports from China. So they are, that's a pretty juicy revenue source. And it's also one that importers are not happy about, but they've indicated that they can live with it if they have to. But it is a quite high tax on imports when you add it up. The reciprocal tariffs, we know they're going to decline, but we don't know the amount. And the reason we know they're going to decline is because the administration is negotiating pursuant to like a defined template where they're bringing in like 6 countries a week and like talking to them about, what kind of import barriers can you drop? How can you drop your tariffs? What can we do to get the tariffs down on both sides? So they're going to decline, but we don't know by how much. Part of the reason why they're not going to go to zero is President Trump has indicated that things like the value-added tax, which is imposed by more than 170 countries worldwide, he views that as being a barrier because the amount of the VAT is nearly always rebated on export, which is the equivalent of the U.S. not charging sales tax on exports. But at any rate, President Trump used that as a subsidy. So so there's a lot of items that even if they lower their tariffs, are not going to go away. So some portion of the reciprocal tariffs are going to remain, but we don't know how much. China is the toughest to model. The 301 tariffs, they're going to stay in place. We don't know what's going to happen with the IEEPA tariffs or the global tariffs, but China is digging in and saying we're not going to be bullied, and and so there's no negotiations going on apparently. So that one is difficult because right now we've got the 2 biggest economies in the world who basically have something close to a trade embargo with each other, because on either side it's very, very difficult to sell at the 100% plus margins that both countries have in place. We also view the sectoral tariffs as likely being permanent, but it's important to note that the scope of these is still up in the air, and I suspect that Katie will be talking about this in the next webinar because companies are there's often a notice and comment process where companies can make their concerns known about the scope of it and things like that. So they're coming, but they are definitely going to, the scope is to be there. In terms of the tariff stacking, the key thing that doesn't stack is the reciprocal tariffs and the Section 232 tariffs. They do not stack on top of each other because the reciprocal tariffs have a specific carve-out for them. Also, the president and his trade team have clarified that as part of the relaxation of the automotive tariffs, that the automotive 232 tariffs and the steel and aluminum tariffs will not be stacking, so that the amount is over 25%. But we still need to see the mechanism as to how that's being done. Our best guess is that the automotive tariffs will trump, so to speak, the steel and aluminum tariffs, but we're still waiting for instructions from customs. So as I said, the USTR is proceeding with a broad template, and they are negotiating with countries. Some countries, such as Japan and India, supposedly are pretty far along. Canada and Mexico are kind of carved out of this. They are not being subject to the reciprocal tariffs right now. It's kind of all being handled there as part of the USMCA review. At the end of 90 days, the administration has indicated that there either will be deals or an additional 90-day extension. The administration is focusing on the biggest trading partners like the EU, Japan, Korea, countries like that. So they're not going to be able to get through everyone. But that's at the end of the 90 days, there's either going to be deals or the indication is an additional 90-day extension. China, as I said, remains on a separate track due to heightened concerns plus the retaliation by the Chinese government. So what are the implications of the Trump tariff? So the key thing that we tell people is you need to understand that there's a heightened risk profile now that we're in a high tariff, high penalty environment. The first one is because the amount of tariff to be paid is generally based on the value of the goods, determined by the country of origin, based on the tariff rate. Basically, if there's a 20% tariff and the good's worth $100, your tariff is $20. So if the tariff rate goes up, then the amount of money to be collected goes up, which means if you get it wrong and you have a tariff underpayment in a high tariff environment, it's very, very quick for importers to run up tariff underpayments, which means the associated penalties can mount very quickly as well. So what this means is at heightened tariff levels, it's very important to get your customs compliance correct. The second issue, and this is not one that's been much in the press, is the fact that in most of the tariff announcement, President Trump has directed customs to impose the maximum possible penalties without regard to mitigating circumstances for the new tariffs, while also directing customs to prioritize making certain that people are paying the new tariffs. And what this means is that customs is going to be using its unprecedented access to the import information that every importer files to be like running algorithms to find underpayments. So what you have basically is through the information that is submitted into ACE, which is the Automated Commercial Environment, which is the customs portal, the customs has a heightened ability now to find underpayments and to go after them. And so you end up combining like higher risk of being caught with higher potential penalties means, again, you need to be paying a lot of attention to your customs compliance and to be taking steps to be certain you're not in that bucket of people who are at an increased risk of getting a big penalty. The third item is if customs is assessing penalties without considering mitigating factors, then it is more important than ever to be considering voluntary self-disclosures when you find an issue. Because in a voluntary self-disclosure, the customs regulations direct that if it's finished properly, customs should assess a penalty no greater than the amount of the underpayment plus interest. So basically, you're settling out the case for no penalty at all, because a customs underpayment that you're making good on is just paying the money you were supposed to have paid all along, and the interest is just to make good because the government didn't receive the money on time. So because you don't get to things like the mitigating and aggravating factors because you're closing it out at essentially a zero penalty, then customs disclosure are more important than ever. The fourth item is the Department of Justice has been saying we are going to be looking carefully at using alternative enforcement tools on top of normal customs penalty procedures. This includes things like potential criminal penalties or use of the False Claims Act, which are ways that these are often like whistleblower suits, or in the past criminal penalties were used for like the worst of the worst, like things like double invoicing fraud and things like that. And that is going to, be an issue as well, and also increases the risk. And then the last piece of it is to recognize that in a high tariff environment, there are increasing incentives for employees and for competitors and for plaintiff law firms to be looking for potential whistleblower opportunities. We had one announced just a couple weeks ago where a whistleblower received a 7-figure payment. It's very important to be considering that as well. And once again, that's a reason to be taking your customs compliance seriously. So someone raised the issue of what is the date that the tariff is calculated from, the date it hits the United States or the date it is released from customs. It's actually the date of entry. And the date of entry is when you've completed all of the requirements to enter the goods, which includes the payment of the estimated cash deposits, as well as filing all the information in ACE that is needed. So that entry date is the key date, because that's when it triggers everything. The final assessment of the duties, though, will occur at liquidation, which is approximately 314 days later. In terms of where does the revenue go, it goes into the general treasury. It's just like customs is the second biggest source of revenue into treasury behind the IRS. So that's kind of the lay of the land there. I will take a break now for John to come in and to talk about some of our, what we call the most frequently asked questions, because there's a lot that come up, but some of them are kind of have universal applicability, including I would want you to pay a lot of attention, especially to why it is a bad idea to try to unbundle, as some people are calling it, your the amount of that's paid for it, because we're seeing so many people online saying, oh, why don't you just carve off your, your royalties, or, set up a side arrangement so you pay half the money in as a retainer or something like that. And those are the kind of things that really get customs going. So I'm going to break there and turn things over to John to go into the second half.
All right. Thanks, Greg, and thanks everyone for joining. From the Department of Redundancy Department, we had the most frequently asked questions. So, Greg and I have spent a lot of time answering questions from clients. We thought it would be helpful to put together a list of the ones that we're getting most frequently. I should mention in the chat, a lot of people have already figured this out, but there is a Q&A box. So if you do want to list your questions there, either we can respond to them later, or if Greg is able to on the fly respond to some of those questions. So certainly feel free to add some questions as we're going through. So starting with the frequently asked questions, the first one we get is how is this even possible? How is the Trump administration able to even impose the tariffs? Another way of looking at this is, when we grew up, we all had the, I'm just a bill sitting here on Capitol Hill. And that's generally how customs and or how tariffs would be enacted, is that you would go through a process through Congress. There would be a period of review. There would be a period of public comment. Drafts, proposals would be made, and then eventually the bill sitting there on Capitol Hill could get passed, and you would have new tariffs. What's happening here is it's really a novel use of several existing statutes, and that is there are exceptions for the executive branch to be able to take certain actions, and the executive has the authority, the president and his administration can take actions for unfair trade practices under Section 301, which was the basis for the Chinese tariffs. The unfair trade practice there was failure to protect intellectual property. Section 232, which Greg had talked about as being the sectoral tariffs, there is an exception for national security. So if the president conducts an investigation and it concludes that certain products, having them in sufficient quantities is a national security concern, then the president can take actions to protect that industry. So that is what we refer to as those Section 232. And lastly, there's a statute that has been used relatively frequently, known as IEPA, the International Economic Emergency Powers Act, in which if there is a national emergency, the president can take necessary actions to allay that national security or national emergency. And here, the Trump administration has said we have a fentanyl crisis, that's a national emergency. We have an immigration crisis, that's a national emergency. And so IEPA has been used as the basis for in imposing a number of the tariffs, including the 20% tariff on China, the 25% tariff on Canada and Mexico. Those have been suspended for USMCA goods. But that is, in a nutshell, how this is possible. In general, tariffs really come from Congress. But here it has been happening through executive orders, through social posts, press releases. And that's what's causing some of the uncertainty, some of the speed of which this is all occurring. There have been some legal actions to try to strike these down. It's not clear whether those will be effective or not, but at least Section 232 in the first administration, many of those tariffs were upheld. So again, we'll see how the legal process works through, but as the time goes, these tariffs are being imposed, and Congress hasn't really taken action to get back some of their power. Another question is, how have these Trump tariffs impacted customs compliance more generally? I will say customs compliance still remains, very important. In the past, you would have situations where the standard tariffs would be, 5.3%, or and if you made a mistake, it was 5.1%. But now, especially with the start of the Section 301 tariffs in the first administration, and now incredibly important with the new Trump tariffs, getting customs compliance right is very, very important, and certainly critical for companies. I will say, big picture, what the Trump tariffs have done is they have placed a renewed focus on the country of origin of the products. Country of origin was always important, but now it is central because the reciprocal tariffs are based on the country of origin of the goods. In addition, a lot of the exceptions for the Section 232 are based on U.S. content. So perhaps less or more so than in the past, it is really important to know where these products coming from, what is the country of origin of them. This is not to say that HTS classifications aren't important. They're certainly very important, but oftentimes we're focusing on the HTS classification to determine whether Section 232 tariffs are applicable or not, because that is how many of these Section 232 have been identified. It's through the HTS codes. What this means from a big picture is that your HTS classification index is really important, especially in a high tariff environment. You want to make sure that you're consistent in how you're classifying your products. It is something that we regularly do disclosures where we look at the HTS classifications used by companies, and you would be surprised how often they are using multiple HTS codes for a single product. So really important to have the classification index, something that you can provide to your brokers to make sure that those are being done correctly. The last three bullets here, I think, all come down to the point that Greg made earlier, and that is we are now in a very high tariff environment. And what that means is when there are mistakes, the penalties can increase very, very quickly. The amount of underpayments can increase very, very quickly. So it's really important to understand how your products are being valued, to make sure that that's being done correctly. It's important to make sure that you're running those post-entry checks and making sure, did we do everything right? Do we have all the elements covered? Classification, value, country of origin, have we looked for assists? Because any errors will get exaggerated or exacerbated very, very quickly. And as Greg mentioned, it's also important to consider using the voluntary self-disclosure. So long as CBP has not started a formal investigation, you can get that self-disclosure credit and be able to correct things, get a clean slate going forward. And oftentimes through that process, you can discover whether or not you may have been overpaying customs in certain situations, which helps things going forward. Some other questions that we're getting regularly. How can I tell which tariff applies? As Greg said, the real key here is understanding that those sectoral Section 232 tariffs and the reciprocal tariff is an either-or proposition. Most often tariffs will stack on top of each other, but this is an exception where either the reciprocal tariff is going to apply or the Section 232. And also, as Greg noted, it creates kind of strange incentives where for certain countries, you may want the Section 232 to apply because it's a very high reciprocal tariff rate. And in other countries, you would probably prefer the other way. That doesn't mean that you're inconsistently marking products, but it does set up a strange dynamic. Again, having that classification analysis is very important, having an HTS index so that you are treating everything consistently will prevent potential penalties down the roads. The next question is, do the automotive and the steel tariffs stack? This question comes up because under the steel and aluminum Section 232 tariffs, they expanded the list of derivative steel and aluminum products pretty significantly from the first time that Trump imposed them in 2018. And what you find is on some rare occasions, there's overlap between the automotive Section 232 and the steel. Again, this kind of falls into the breaking news category, but yesterday it was clear that those tariffs would not stack, and more than likely it would be the automotive tariff, although we're still waiting for clarification, but more than likely the automotive tariff Section 232 would apply, and not both the automotive and the steel. Another kind of general question is, will new tariffs ever slow down? Our best guess is that, broadly speaking, the framework is now in place. There will certainly be negotiations on the reciprocal tariffs, but again, the buckets that Greg outlined in the first portion, I think, are going to be the ones that are going to stick. That's not to say that there couldn't be more Section 232 sectoral investigations. And in fact, it was a little bit surprising that the medium and heavy duty truck investigation started very, very recently last week. And that's where I think a lot of the future action on tariff is going to be in that area. What's going to be the treatment of copper? What's going to be the treatment of lumber, pharmaceuticals, semiconductors? All of those will fall under the Section 232 investigations, and we'll get more information about those tariffs once the investigations have concluded. Question about what the future of the USMCA and how it's going to impact tariffs. The USMCA was set to be renegotiated in 2026 by its own terms. Some of the actions that the Trump administration took early on, including the imposition of the IEEPA tariffs on Canada and Mexico, impacted that. We do think that the USMCA, if those discussions don't get pushed up, they're going to cover a lot of the current tariff situation that has existed already, meaning the IEEPA 25%, the current USMCA, the sectoral section. So how that gets wrapped up, I think, is going to be important. We suspect that under the new USMCA, there will be a focus on having a unified North American front in trade. So I do think that Canada and Mexico and the U.S. Are going to be able to reach favorable terms, and it will be more of a collective going forward as North American presenting a front to the rest of the world, including Europe, China, and so forth. A few other questions we're getting is China plus one still a viable strategy? What China plus one refers to is something that both the first Trump administration and even the Biden administration encouraged, and that was moving production out of China into other countries. And this involves taking Chinese parts and components and then finishing them in another country, which is typically known as the plus one country. Under the new reciprocal tariffs, that strategy has been called into question, and that's because many of the plus one countries that companies had been using, such as Vietnam, Malaysia, Thailand, those countries received very high reciprocal tariffs. Those are currently paused, they're being negotiated, but it remains to see whether those reciprocal tariffs remain high, and if so, China plus one doesn't look as promising as before. The one thing that we do want to note, and this was an issue even when the Section 301 duties came up, is that you have to be really, really sure that the Chinese parts and components are substantially transformed into a new product in that plus one country. Mere assembly screwdriver operations does not amount to a substantial transformation. So you have to make sure that you have done that analysis in order to take advantage of the China plus one strategy. Next question: Will my product be duty free if it complies with the USMCA? The answer is generally yes, and that's one of the reasons why a lot of companies have been really looking to make sure that they can take advantage of the USMCA, because it is one of the few opportunities where you can get duty-free treatment. It is important to know that being USMCA compliant, though, means that you have a certification of USMCA compliance at the time of importation. This is not a situation where you can, after the fact, say, okay, we're going to certify the product. It does have to be done at the time of importation. We do note, though, that the Section 232 tariffs still apply. There are special rules there. As Greg noted, for auto and auto parts, it's the non-U.S. content. They're still, the government is still working to figure out exactly how to make those determinations. And for steel and aluminum, it's non-U.S. origin. So if you have steel that is melted and poured in the U.S., that wouldn't be subject to the tariffs, and aluminum that's smelted and cast would also not. The one weird situation with the USMCA is that Section 301 tariffs, and those are the tariffs on Chinese goods, could potentially still apply even if you are a USMCA compliant good. And that is because under the USMCA, the way that you determine whether a product is a product of Mexico, the US, or Canada is through a tariff shift analysis. But Customs has made clear, though, that when you're determining the country of origin for purposes of Section 301 and 232, it is a substantial transformation analysis. So in certain relatively rare circumstances, you could have a product of Mexico under the USMCA, but that same product could be a product of China for purposes of Section 301. So that is one issue to consider. Greg touched on this. A frequently asked question is whether there's an exception for electrical components. The short answer is not, kind of, sort of, but not really. What happened was under the reciprocal tariffs, there were exclusions for certain products, including semiconductors. Semiconductors wasn't defined, but the Trump administration did later identify the HTS classifications that would fall under the semiconductor category. And when those were listed, they fell into that sectoral bucket 5, which isn't subject to the reciprocal tariff. So short answer is currently they are not subject to the reciprocal tariffs, but we do expect that once the investigation is complete, there will be national security implications, and a new tariff program and separate tariffs will be imposed on the products that are currently the semiconductors, which are a lot of electronic components. Another question we have is, what's a reasonable care memo? This is a request that we're getting far more frequently. And what a reasonable care memo is basically when you're deciding on which HTS classification to use, whether a product has been substantially transformed, whether there are exceptions that could be considered, such as under Chapter 98, which does have some exceptions for tariffs. Using one example, there's an exception for products that are intended for handicapped and blind persons. Whenever you're making those types of determinations and you have questions about whether it is the right HTS classification, whether it's the right country of origin, it's a good practice to prepare reasonable care memos to put those in the files. Under the customs regulations, importers of record are required to use reasonable care, and having that memo is helpful in the event that you're ever questioned by CBP on why you decided to use a certain classification, why you think a certain product has been substantially transformed from Chinese components into a product of Thailand, what have you. Having that on file is helpful because you can, if you do get a CF28, which is a request for information, you're able to provide that information to CBP. The last point that I wanted to make is strategies to forget, things that we're hearing. And Greg mentioned this. The internet is outstanding. Sometimes, however, it comes up with bad advice. And one of the strategies that we're hearing a lot of companies consider is what I think is now being referred to as bundling. It's also being called creative payment methods, alternative payment methods, things like that. But the goal at the end of the day is the same, and that is to take the product that you have, reduce the value of the product for purposes of importing it into the United States so that you pay less tariffs. Where this issue typically comes up is in related party transactions. And you have situations where you may have a parent company that sells to a subsidiary in the US. The parent company gives the subsidiary a sweetheart deal so that they pay less in tariffs, and in turn they can somehow true up with the subsidiary through other GL accounts to make sure that subsidiary is treated properly. The reason, for that reason of the potential for the sweetheart deal, on your customs form for related party transactions, you're required to identify if it's a related party sale. And that's so customs can say, okay, we're going to check the valuation to make sure it's being done properly, to make sure it's the fair value and arm's length transaction value. Where we're seeing this happen now is with unrelated parties. If I were a DOJ attorney, the way that you would describe it is two unrelated parties have decided to collude to reduce the value of an import, and then a kickback will be paid at a later time in order to kind of true up. And I'm not suggesting that companies are doing this because they're trying to be clever or because they're trying to be pernicious or anything like that, but rather they're trying to figure out ways to get around it. But under customs regulations, the value of the import has to take into consideration all amounts paid or payable. So reducing the price of the import and then saying, hey, we're going to get you a separate payment for IP licensing or service and handling or any other sort of side payment to help make things better is not a strategy that should be used. Instead, the value should reflect the transaction value, the arm's length value of the product, and include all of the various components, whether it's assist or otherwise, to bring that into effect. Same thing's true with shipping parts and components for assembly. We talked about that a little bit earlier with substantial transformation, and then attempting to reclassify products so that they get favorable treatment. Be very careful, as Greg said. The CBP, with their ability to access the ACE data, can look for anomalies. They can look for situations where changing the HTS code, the country of origin or product, and they will send you CF28s or information requests asking why exactly did you make those changes. So those would be some strategies to forget, and just to be sure to look at those issues very, very closely. And I will turn it back over to Greg.
So for the record, I suggested that we have tariff-related CLE codes, but I did not get my way. So by far, the biggest takeaway you need to understand from this is that new tariffs are here, the increases are substantial, and they potentially are only going to increase as more sectoral tariffs are announced and as measures are put in place for the U.S. industry to petition for more tariffs. The uncertainty is going to last for several years, definitely at least through the 2026 review of the USMCA and potentially throughout the whole Trump administration, because we're seeing the announcement of more Section 232 tariffs. Kate Wagren is going to come on and shortly discuss that now is the time for companies to be reviewing both their buy and their sell side contracts to determine how to incorporate tariff-related flexibility, because a lot of companies are scrambling. They're trying to figure out how can they pass on tariff increases, when are they stuck paying tariffs that they didn't anticipate, and it's just a good idea to be taking care of that explicitly rather than relying on things like, a general force majeure provision, because things like that are intended for situations like, a hurricane blew down my factory, not Hurricane Trump blew up my cost structure. In a high tariff environment, and this one is very key, it's critical to understand that CBP has unprecedented visibility into the import data, into import information, not only for your company, but for your competitors as well. So they can do things like run programs that will identify anomalies. And I've been in customs audits where I've asked customs, like, why, just out of curiosity, why are you focusing on my client? And they'll say, we were running, an algorithm, and 14 companies stuck out as potentially not handling this issue correctly, and yours was one of them. And they are going to be leaning on that very, very heavily. So now is the time to be certain that you've got your customs compliance in order, particularly with regard to classification, which often determines which of the tariff regimes you're under, whether it's 170% for China versus 25% for sectoral tariff, but also for country of origin. As we're going to be talking about in the third presentation today, country of origin is now one of the key drivers as to how high your tariff is, and it can make it an immense difference, because you have like the UK and Singapore at 10%, Vietnam at 46%, and China at 170%. So getting the country of origin correct, particularly if you're using third Chinese parts and components and processing them in another country, is absolutely key. So we see a lot of importers who are performing customs audit and supply chain integrity reviews, updating their compliance, and putting reasonable care memos in place right now. If you have need for anything like that, be sure to reach out to us. It's something that we highly recommend, because it's taking into account and putting in place proactive steps over the one thing you can control, which is how you handle your own imports. So that is a very big takeaway, that customs compliance is very much the key. We have resources to help with these things. We have a Tariff and International Trade Resources page, which includes resources to help multinational companies and importers understand the tariffs as well as other items. And we have white papers on managing import and tariff risks and managing supply chain integrity risks. And we also have a biweekly series for the last 3 or 4 years that's sortable about what every multinational company should know about pressing international trade topics, which includes, it's hard to remember sometimes, but items that have nothing to do with tariffs, things like OFAC and export controls and CFIUS and things like that. So feel free to peruse our content there if you're looking for the old ones, or to click to register.